Welcome back. I'm George Abernathy, the proud president of FreightWaves, and I appreciate and really thrilled that you're being able to join us today at our 3PL Summit. Speaking of being excited, we've got a unique opportunity right now. The interim president and CEO of the Transportation Intermediaries Association, TIAA, Doug Clark, is going to join us now for the next 20 minutes or so to talk about the current state of the industry, where the industry's been in the past through his decades within this, and what he and TIAA see for the future of intermediaries and of the 3PL, 4PL, and brokerage market. Doug, welcome. Thanks for doing this for us.
Well, you're welcome, George. Thank you for inviting me. It's quite the honor to be the representative of TIAA to FreightWaves for the first time. I've been in this role now for 4 or 5 weeks, and I've gotten to know staff better. Some of them are industry veterans, others are not. But it's been a great experience to have the support from the executive committee, the board of directors, and our trade associates to support me in this interim role.
Doug, that's really wonderful. I appreciate that. Let's give our the folks who are joining us just a bit of your background. You go back. You know, we've seen so many things, and I really want to talk about those back to 1980 with deregulation, and then we went through 2000. Give the folks a little flavor about where you started and how you ended up where you are today.
Oh, it was kind of crazy. I was bounced around in different industries, and I was working out at budget rent-a-car at DFW Airport, and then going to school during the day, and then so later on around 1980 or 1979, it appeared we were heading into a depression. Interest rates back then, some people don't even know it, but they were 14, 17% for a mortgage, which is crazy. And today they're 3.5%. And when the economy was heading south, I said, okay, I have to do something about this and get somewhere where it's secure. So I knew I had to get in food and beverage, because that is food and beverage and alcohol, because that's what survived during the Depression. And so I started doing all my research on that, and being Southern Baptist, I had to kind of rule out alcohol, but I did wander into the food industry over in the produce market. And I went to work for Goldman Hayden, a founding company back in 1963 that was buying and selling produce, and I started buying and selling tomatoes. And of course, back then we had exempt transportation. You had chickens, which were exempt going out west. You had produce, which is exempt coming back. And that was our transaction. I mean, you didn't have to have an MC number. You had to have DOT authority, but not an MC number because it was not regulated. And then so that's what we got into. And also during that time, you might remember some of these things, we called them hot freight. That were people that would be hauling freight illegally and were able to get away with it. They were hauling, regulated freight and just running under somebody else's authority or trying to sneak through it. So I got into that, ended up in the exempt transportation side of it. After that, 1981, we got on the boat during deregulation, and we started a cargo master, and we started growing ever since.
So from cargo masters to great wide, it's been quite a career. Let me take a couple of points along the way, and put them into the perspective of today. Today, and a lot of what is being talked about during this 3PL Summit are the technologies and the digitization that we're seeing in the intermediary, in the brokerage market. There's a real parallel back to 2000, when the internet was really coming into vogue with regards to how it's going to impact intermediaries and brokers. And there was a lot of talk back then that there would be disintermediation, and the traditional broker might be in trouble. There might be such a threat. Well, that was 20 years ago. How do you see that parallel, and how do you see what you've seen as threats to the brokerage industry and how they've been able to survive and thrive?
Well, I think our vendors have helped us quite a bit. And I remember back in 1986, Alan Lunn allowed me to come out and speak with Kenny Lunn, who was running their infrastructure on their systems. And I looked at what they were doing with a company called DIBA, I believe, back then. And then all of a sudden we run across Tom McLeod. Tom McLeod, we ended up being, I think we were a second freight brokerage. And Jim Siphon over at Turbo at the time, you probably remember him, and now there's Siphon Logistics. And so he was also a customer of Tom. Now keep it in mind, Tom himself came over and trained us. He trained a bunch of young knuckleheads who were just kind of joking in class. And we were getting along with this, and Tom, he's just dead serious and teaching us on this. So since then, and by the way, I think Siphon, I believe he owes us a cut of his business because we helped him build his brokerage company or his brokerage software. But anyway, that was then. And then when you think about investment, we got into we had 4 or 5 different offices back in 1986, and they were in different locations. And we had them all hooked up by 56K data bit lines. And if you remember back then, they were all in VI, and you could get an amber screen or a green screen, and then you'd hit a key, and then you'd wait for it to show up. But we were at the cutting edge of technology back in 1986. Now, the vendors, like Tom McLeod, have taken us a long way. I mean, they've continued to invest in their services and the things they provide, which have helped these brokers grow. I remember sitting on the back of the bus with Scott Mosgrip, and it was his first TIAA meeting. And he was this kid with a vision owning Internet Truck Stop. And then now you look at what Truck Stop provides today as far as support services. And I think we have continued to grow along those lines, and I think we've continued to invest in some technology, and that's why we have legacy companies. One funny story, I looked down, I saw this phone, PDA, whatever you want to call it, back in 2000. Do you remember Jeff Crow, president of Landstar? Years and years ago. All right, so he was one of our keynote speakers. We were a much smaller group at that time, but he was one of our keynote speakers. And so he kind of went up there. Well, he did go up there. He went up there unfiltered, and we're at a freight brokerage conference of TIAA, and he holds this up and he goes, "Every one of you will be gone next year, and this is going to replace you." And it was like Steve Jobs telling you to hold your telephone. I was like, where did that come from? And so I've never forgotten that moment. It might have been 2001, but I've never forgotten that moment of somebody saying, you're going to be pushed around and replaced by technology.
Wow, that's a fabulous story, and so pertinent. Right now with the onset of these, really large digital brokers who are doing great work, and to your point, bringing technology as sort of the next generational level. And when you talk about Tom McLeod, there's a company that is thriving today, and certainly well past just 2 brokers that they're working with. So that as you talk about the technology, how have you seen that technology being adopted? And I know you've only been for 4 or 5 weeks in TIAA, but you've been in TIAA a long time. How does the vendor community migrate and treat the small and medium-sized companies in the ways that they treat the large ones? Your time at Allen Lund, you're talking about an industry leader, an industry innovator. How do those small and medium-sized folks keep up with what the industry leaders are doing?
When we're talking to our members, and they come to our conventions and they see what services are being offered out there, not just dropping names, but I think of how Toyota came into the market, and they took over U.S. auto sales for a while, and what they did is they had to change. And then we, as automobile companies in America, adapted to that change. Now they're kind of going through that again with Tesla. And eventually that will all work out. Now, when we're talking about some of the new entrants into the market, I will say this: brokers, for the most part, our members are capitalists. We don't have a brokerage that is not making money. We don't have the wherewithal to lose money. We have to be very prudent with our money. I mean, when I talk to people or have visits with them, I tell them that any expense that they have, they should be treating it like it's coming out of their back pocket or it's coming out of their purse. And I think that is a mantra that people like myself who've had successful companies think. And of course, again, we cannot compete. We can't compete with companies that can lose money and are trying to get share. Now, what we do have, though, is there's 28 million small businesses, I believe, in the United States. They contribute to 50% of the GDP. I think CCJ came out with a good article today on kind of explaining who we're dealing with in such a fragmented economy. What we do know is this: most shippers don't want to have a carrier department. The last thing a shipper wants to do is manage their freight. They don't want that phone call at 1 o'clock in the morning saying, hey, the product's not ready, and what do I do? They don't want those phone calls. And the shipper, all he wants is to give you an order and get it taken care of. Now, in brokerages, what we can do is we can be in freight management. We can go back to a customer and say, hey, let's take a look at your complete spider web and show you where some efficiencies are. And on the freight management side, that's where we would end up hauling some of the easy loads, if you will, green beans or canned goods or paper towels or toilet paper or something like that. In the most markets like that, we are not going to compete. We just don't. We're up against asset carriers who are making great utilization of their equipment. They're using drop trailers. They're doing all kinds of things that benefit their company. And then with brokerages, just like me when I was in the exempt world, you're dealing with all kinds of things you can't deal with. You're dealing with production problems. They get out in the field and lettuce, and then all of a sudden it's too hot to harvest, or it's not a good quality. And so it pushes back, and these trucks have to wait and wait and wait to get loaded. And then so everything transcends into delays and conversations and reworkings, dealing with hours of service, letting the customer know what's going on. It's all this communication going on. And as Jeff Crow said, the phone would take over, but I doubt that a shipper wants to receive a phone call from a bot saying, hey, you have a problem here. So those are a little bit different. And since, oh my gosh, again, we could talk for a while, but I have to bring in one funny story because I just brought it up about lettuce. Back in the day, we were a part of something that turned into another facet of our industry, which was processed food. Back in the day, when they were harvesting lettuce, it was either 18 heads went in a box or it was 24 heads that went into a box. The rest of them were irregular shaped heads. Then what would happen? They would till all that lettuce under. Then there was a bright idea that, well, what if we take this lettuce and we cut it up? And then so that was the evolve. We started hauling 1 or 2 bins of bulk lettuce back to Dallas, and then they started cutting it up. And then that's how we ended up with the fast foods that have shredded lettuce and things like that.
So let's talk a little bit about your position in TIAA. We talk about Interim, so you've got a little bit of, you got a lot of history, you got a little bit of flexibility because it's Interim. There will be somebody after you, but you do get to put a little bit of the Doug Clark footprint. You get to really do something with this. What excites you about, however long this is going to be, about being able to engage from this position with the TIAA membership?
We have a great culture. We have great people. And just like when you took over Transplace in 2006, you went in and you put your footprint in there too. I mean, I was surprised when Transplace came about in 2000 because you had MS carriers, you had Swift, you had Covenant, U.S. Express, and you had all of these type A controlling personalities. And I was wondering how those people could even sit down in a room together, because every one of them was very smart and had very successful businesses, and all of them had strong opinions. And I think as an intermediary, we have to be more collaborative. We have to understand that we don't really have anybody we can yell at or discuss with. I mean, the shipper gives us freight, we can't get mad at them. The customer and the drivers haul our freight. They're the strongest and weakest link that we have in making us look good or bad. And in the middle of this is controlling the movement where it happens very, very smoothly and quickly to satisfy both parties on what they have agreed to.
That's so well said. That really is. So the mission, of TIAA and the serving of the membership being so important, as you think about TIAA's potential growth, what do you think, and where do you think that growth will come from over the next 5 or 10 years?
Just as the auto industry was challenged, just as we're coming in with new entrants into the freight market to challenge efficiencies and things like that, what we have to do as TIA is continue to ramp up and educate our members. There are so many good programs out there now that make drivers or actually make our employees of brokerages more efficient. When the new entrants, what they actually want is they want the data, they want a list of the customers, and they want the relationships. And brokers that I know and I've worked with in my entire career have good relationships with their customers. And these brokers have intellectual capital that can't be bought, sold, or traded. They understand, they know where the keys are hidden when you have a 3-drop load and the driver is doing this at 6 a.m. in the morning. They know how to resolve a problem quickly. And the value there is enormous. And then just like I mentioned on the lettuce side of it, that created a whole new wave of processing food. And it created a whole new industry of food and even beverage because of the sports drinks, not sports drinks, but the vegetable drinks that they make and all these things. Everything went from this food and beverage. And then you have the organic side of it. And then there's so many different facets of freight that moves. And customers don't always have freight year round. Some of it is very cyclical. Some of it is based on seasonality. Just like, with the processing companies, they're pulling lettuce from all parts of the United States, not just California. So, but we get that. But when we have history, when we have intellectual capital, then we are a better front person and a better partner for the shipper than any bot is going to be.
I wanted to talk a little bit, Doug, and we've just got a couple minutes to go here. Thinking of the future and how you see the industry 5 to 10 years, you've talked about the evolution from your experience. I want to put it in the context of how data is being consumed and how that levels the playing field to some degree. Are you seeing that as you educate, as TIAA educates their membership, that being able to do more with data as that member is leveling the playing field between whether it be the digital brokers, the largest brokers? Is that data really a way for the playing field to be leveled?
It has gotten leveled dramatically in a lot of different ways. I mean, back when Al Jubitz started DAT back in 1978, and he put up those monitors, and people were paying, we had to have an 800 number, and it would cost us almost $2 a minute when they would call in from one of those phone banks from California or Arizona or wherever they were picking up from. And this was not sold to shippers. This was only sold to brokers that provided visibility to freight that was available for these guys that didn't have any other communication. Now, FreightWaves, Truck Stop, DAT, Trucker Tools, they'll sell to anybody that wants information and wants data. So consequently, everybody knows what the market is. Everybody knows what the rates are. And of course, we're always going to have shippers that would have a number they would like to pay, but it's not what the market is and what they need to pay. So when we use this information, you and I had spoken earlier, I have a friend of mine, they use FreightWaves data every day to send out to their customers. And I think the data is a good tool to communicate to your customers, because then you kind of get them ready for the fall of rates are going up. And you kind of cushion that, as opposed to getting into a defensive argument. You have data to actually support what your argument is.
Great point. And I am going to go to one more question for you, and it's something of a requirement, when you're having a fireside like this, to ask an industry leader like yourself to look into that crystal ball. I won't ask you to look into that crystal ball that far down the road, but we're in a true black swan event. We are in that moment in time where, we've been around a long time. There have been a lot of circumstances that have come our way. This one, no one could have predicted. But I'm going to ask you to look in that crystal ball a little bit. What are you seeing within the market over the next 6 to 12 months? And how do you see the world of capacity turning?
What we're seeing, George, is we've seen 50% or more of the truck drivers out there are baby boomers. And they're close to retirement age or they're past retirement age. And then we throw a pandemic at them. And then we throw all these exorbitant insurance costs at them. We see all of these nuclear verdicts, which are just crazy. And we see a constant push on regulating them. I mean, just like Assembly Bill 5 out in California, that's one of the things we really need to be looking at. Getting rid of people to actually be an independent contractor or own your own business. Those things are scary. And then to continue to imply government regulation on people that know what they're doing is very much a disappointment. We end up with all this. We have people now that are just mentally unstable. And I know for a fact some drivers have had to deal with this on the road. Some people are just out of their minds. And so that being said, some people are just saying, I've always wondered when the time was be, and now the time is it, to hang up my spurs. And so what I see is some capacity problems there in the future. I also see that we don't really have a pandemic problem. We have a demand problem. And the more demand we get, the more we're going to need transportation. And what we don't know is what's going to happen with this pandemic. We talk about vaccines. You and I have spoken to people. They say, I'll never take a vaccine. It's unproven. And then we talk about treatments. What we really want is something we can go down to the drugstore, take it off the shelf, go home and take some, be in bed for 3 days, and go back to work. That's what we want. I mean, that's something that makes sense to us. This other thing does not.
I've got to wrap up. I want to say TIAA, even for however long, Doug, they're going to be lucky enough to have you. They're in great hands. I want to thank you for doing this. I want to thank you for the longstanding service that you've done within the transportation, within the intermediary industry. Thank you for doing this. Much appreciated from everybody here at FreightWaves. Thanks a lot.
Thank you, George. See you soon.